Multiplex investing in Toronto is probably going to gain speed in 2025, but let's cut to the chase. There are no shortcuts to big returns here. Multiplex investing is not a one-size-fits-all answer for everyone, and every option comes with unique challenges and trade-offs. Starting 2025, borrowing costs should be drastically lower, and financing options are also making projects more accessible. Now, market appreciation is becoming less predictable, and so now more investors are going for rental income and cash flows, and that does mean more projects and more units. But to truly make these investments work, you really need to understand what you're getting into. And so today, we're going to be breaking down the three main types of multiplex investment options for Toronto investors: turnkey options, conversion projects, and bigger builds as well. Now, each one of these has its own strengths and weaknesses, and if you are serious about getting into real estate investing next year in 2025, you will need to know which one makes the most sense for your goals, your capital, and your risk tolerance. So let's get into it. But before we do, don't forget, if you find this video helpful, hit that like button, subscribe for more Toronto real estate investing tips, and if you want to chat one-on-one, you can always book a call with us. The most hands-off way to invest in a multiplex is to buy a turnkey property. It's already split into rental units with decent finishes, ready to generate rents from day one. Now, these days, the most affordable turnkey multiplex in Toronto is probably a bungalow. With today's softer market, you might find a 2-unit bungalow in Toronto ready to rent out for around $950,000. After a 20% down payment and closing costs, you're looking close to about $225,000 in upfront capital. After covering your mortgage and operating expenses, and this includes utilities, property taxes, and insurance, but excludes property management fees or other contingencies, you could expect around $300 of positive cash flow a month. Now, you might see a small boost in cash flow if you go for a larger house with 3 units, but let's be real, it's not going to be life-changing. What it does offer, though, is steady, low-effort rental income. The reality, though, is that you will have limited upside with a turnkey property on value add. The value is mostly maxed out here, and the cash flow does reflect this. Still, turnkey properties are ideal if you don't have the time, capital, or interest in managing renovations. You'll sleep easy knowing that your rental income covers your costs, and you will build wealth gradually through principal paydown and long-term market appreciation. Now, if you are ready to take on a bit more risk, a multiplex conversion might be the right fit for you. This option involves buying a property that needs renovations. You might be paying less upfront, but you will need to invest more to improve it. For example, you can buy a semi in Toronto priced at around $1 million with the plan to convert into 3 units. Next comes the renovations cost. Now, you can expect around $150,000 to add units, update finishes, and get it rental ready. But once it's done, you might see monthly cash flow around $2,000. And here is where the real advantage lies. After renovations, you can go back to refinance this property based on its new higher value, potentially around $1.3 million. And if you do this, you can pull out some of your initial capital to free up cash for your next project sooner. Now, taking on projects do have the added construction risk. If you don't have the experience, time and cost can get out of hand pretty quickly. With that said, conversions do strike a better balance between risk and reward. It is definitely still a project, but it is also more straightforward than top-ups or builds, and there's less of a chance that your budget can get completely out of hand. So while there is risk, it is definitely more manageable, especially if you know what you're doing and you plan accordingly. Finally, there is the high-risk, high-reward route. Topping up a bungalow to build a larger 4-plex and a garden suite in the backyard. This is the most capital intensive and complex option, but if you do get it right, the potential returns can be pretty massive. Now imagine you're buying a teardown in Toronto for around $800,000 and you plan to build a 4-plex and a garden suite on there. You'll need a 20% down payment, but the real cost lies in the construction. At $250 per square foot, the cost for the top-up and the ADU can easily hit $1.2 million, including soft costs. Now, depending on how you're financing it, you might also need to factor in an additional $150,000 in carrying costs too. But with this kind of investment, your returns could be pretty significant. Once it's done, the property could generate around $15,000 in rents. And at a 4.25% cap rate for Toronto multiplexes, the valuation could jump to over $3 million, giving you over $1 million increase in value. And if you are able to refinance this through the commercial CMHC MLI Select program, you could still see a positive cash flow of close to $3,000 per month. With that said, this is a massive project. You'll need substantial capital for construction, and we are also seeing huge variations in construction costs based on who manages the build. If your cost of construction goes from $250 to $500 per square foot, and we have seen quotes that range this drastically, that can make the difference between a huge gain or a loss. And so while potential rewards are high, this is a very advanced project. It's not just about having money, it's about having the experience too to manage the project and keep costs low and stay on target. Execution is everything here. Now, there's a few more points on financing construction, especially for conversion projects. In the past, these types of investments were limited to a very small pool of investors. Most of these investors either use cash or access a HELOC to take on these projects under $200,000 in construction costs. So even if you have the experience, the time, or even income to borrow money, access to cash for these projects weren't that easy. However, starting 2025, a new CMHC program will make it easier to finance these kind of projects, particularly if you're living in one of the units. You will be able to access a maximum loan of $1.8 million, with the extra financing not exceeding the project cost, and the property can have up to 4 units. So we do expect these conversion projects, these middle ground multiplex investments, not turnkey, not new builds, will gain a lot more traction starting next year. To sum it up, each Toronto multiplex investment option does come with its own set of trade-offs. Real estate investing is all about finding the right balance between risk and reward. And while there's definitely money to be made in 2025, there's no easy way out. You will have to choose the path that best suits your resources and your long-term goals. If you are curious to learn more, let's chat. We can take a look at your situation and help you figure out the best option for you. We're not just another real estate sales brokerage. We're experienced investors in Toronto, especially when it comes to multiplexes. Whether you want to buy a property that's ready to rent out or you want to convert one into multiple units, we can help. Here's what it's like to work with us. We'll take the time to understand your goals, help you find great investment opportunities using numbers, and eventually help you find the option that fits you best. Need renovations? We'll connect you to trusted contractors as you manage your project, and we'll be around to coach you along the way too. Once it's done, we can lease and manage the property for you as well. Ready to get started? Just head over to this link here and let's chat.